So we had a nice continuation move last week on the S&P 500 to close all the way in the low 4,500s on the weekly. In only 3 weeks, we went from the low 4,100s to 4,500. So over a 400-point move in only 3 weeks. Very rare that occurs on the S&P 500. So a nice upwards move that's going with the thesis that I've had now for the past month, or even over a month now, that thesis of 4,700 plus by February of 2024. So in a very aggressive move thus far. And something I do want to talk about today, which is very interesting, is one, just based on the flow last week, we saw a large uptick in VIX call flow. You can see here 75.8% calls to 24.2% puts. And not only that, these are pretty big in terms of premium. You can see 2.1 million in premium here, 3.5 million, 1.5 million. And for example, here, this is a put sell, but most of these, generally speaking, are calls that were at or above the ask, as you can see from up there. So a lot of premium going into it. And even earlier on in the week, you could see from Wednesday, for example, we had the 26 calls for 790,000 and 1.8 million. So typically when you see call flow or even put selling like this, that one has a lot of premium behind it, like I just showed you. And then two is quite a bit out the money with not that much time until the expiration. This is only about 2 months in this case. You tend to see some form of an abrupt pullback in the S&P 500. Now, just based on what I see on the chart right here, if we just go to the weekly chart, which is what I was referencing before, this is a very strong chart. We had the head and shoulder play out for this corrective move that I was talking about back in end of July as well as early August. We had the corrective move play out. We had that bottom form end of October, and now it's been a straight shot up. A lot of those bears getting squeezed out. So just based on technicals at the moment, it still looks very strong for continuation. Again, my target is still 4,700 plus by February, so we have a lot of time until then. However, I would not be surprised if there is a bit of a window here for some form of a pullback. I don't expect it to be that large. Honestly, it probably would only go to about 4,440 if it wanted to. This pullback window would basically start tomorrow on Monday and then end at the end of the week. Of course, we do have Thanksgiving coming up, so Thursday will be off, and then there's a half day, I believe, on Friday. But regardless of the strong technicals that I'm looking at right now, there is the fact that we saw a lot of this VIX call flow here, which characteristically means there's going to be some type of a spike on the VIX. It doesn't always have to be the case, but it's something to watch for, especially when we are as overextended as we are right now. Indicators like the RSI, for example, on the daily are getting overbought at the moment. And of course, we will likely continue up from here eventually. But in the short term, if we're just talking about this week, there is potential at least for some form of a pullback whenever we see flow like this. So it's just something to be aware of going into this week. And if I go over to the VIX's chart, you can see it's just been absolutely hammered lately, which is a great thing. That's helped promote this upside move. And we're all the way back into the 13s again, which is pretty crazy since it was all the way in the low 20s not that long ago. So again, we are entering some form of a demand zone here for the VIX, which can have some type of a short-term pop before it resumes its downward trend, because in both of these scenarios here, whether it wants to continue with its downward trend just from here with no pullback in the S&P 500, or if it wants to provide a pullback by shooting up just for a small amount of time, both of these scenarios do end with more downside here in the VIX, likely into the 12s again, believe it or not. So that's what I'm watching at the moment for this week. I'm not shorting the S&P 500 at all. I don't plan on doing that actually until February. Like I said in the last video, I don't plan on doing that until February of 2024. So really, it's just buy the dip on any substantial dip, as I expect this to continue up into that February time period. But one thing that I am interested in, regardless if we get a pullback here on the S&P 500 or not, which again would probably be very minor, only the mid 4,400s at maximum. One thing I am interested in though is Tesla for this week. There is a very, very bullish setup on Tesla right now, guys. You can see here a couple of things. First of all, we have an inverse head and shoulders. We have the left shoulder here, we have the head, and then we have the right shoulder. I referenced this in the Wednesday video last week. If you watched that, an inverse head and shoulder breakout like we've seen so far is a bullish sign, which typically has continuation if it's able to hold over the breakout level, which in this case would be roughly around 227-ish to 229. Now, the second thing, we have a golden pocket convergence with this inverse head and shoulder that is between the 0.5 retracement and the 0.618 retracement here. So this green range right between roughly 200 and 220. So not only do we have a supportive range, we also have an inverse head and shoulder that has already shown us that there is some strength here as it's breaking out. The third thing that happened as of last week is we have a curl setup. And basically what a curl setup is, I'll show you if I zoom in a bit here, you can see we're curling right now off of a key downward trend line. And I can show you just based on drawing this here with this curve tool, we have a slight curl. So basically a test of that downward trend line, a minor pullback, and then it got bought up right off of that pullback. This is a curl setup. We broke out of the inverse head and shoulders pattern here. We tested the first downward trend line, had a brief rejection that was bought up like we saw on Friday, and now we should see, as long as it remains above the low of day from Friday, which is the key here, we should see it basically shoot straight out like a cannon for continuation into the mid 250s from here. So based on a trade setup, while we are up here, if I go to the 15-minute chart, we know that one, like I just said, we have to stay above the low of day from Friday, and the best way to characterize that is a 1 hour close below being your risk in this case. So we know that would be our risk, and regardless, after that, you can look for key support levels to add for this trade setup, whether we actually hit around 232-ish, because this was a supportive level from the day prior, or if it's around 234, we know that we can characterize our risk as roughly this 226 to 227. And otherwise, we're really just looking for a break back above this downward trend line that I showed you, this blue level here, which is around 238. So if that happens, this thing's going to shoot straight up. The best confirmation here afterwards would be 243-ish to close this gap, and then it can continue all the way up, like I said before, into the mid 250s. So really, we're looking at if we can snag around a 232 entry on this, you're looking at about 20 points of reward if it does hit that 250s target here. So a valid swing setup that has a very supportive structure, like I said before, with the inverse head and shoulders here, that golden pocket convergence, and now a curl setup. So I really like how this one looks here for continuation upwards. And of course, the rest of the market is showing a lot of strength at the moment. Not only the rest of the market, but it is dominant in tech. At the moment, we've seen a lot of strength there. And also, paired with tech, like I showed you in previous videos, Bitcoin is looking good at the moment. Bitcoin tends to lead moves in the NASDAQ, so it basically front runs moves that we eventually see in the NASDAQ for upside. As we saw the breakout here back in around mid-October for Bitcoin, which was followed by a breakout a couple weeks after in NASDAQ, which has continued upwards, and now Bitcoin is continuing to around 38,000 at the moment. So NASDAQ, you would assume, just based on this variable, would do the same. And regardless of Bitcoin's performance, if you look over here, just at a simple QQ chart, we noticed that there was this key break of the downward trend from over here back in early November, and it's just been straight up since then. Very, very bullish close again on the weekly. Like I showed you on the S&P 500, it's been 3 weeks of super bullish closes, which you would expect a continuation upward. And also, like I showed you in that Wednesday video last time, we have a valid cup and handle pattern, not any cup and handle pattern. It is a multi-year breakout of a cup and handle pattern with a fake breakdown from over here. So that makes it even more bullish. So a lot of bullish emphasis here on NASDAQ. Of course, there can be minor pullbacks from here, but again, if there is going to be a pullback, it's likely to be minor, like I shared with you on the S&P 500 earlier. Other than that, you should expect it to continue up from here. And really, we can expect the market to continue like it's been going so far, as long as the weeklies close as strong as they're closing right now. So again, with 3 weekly closes in a row like this, even though it may seem overbought, it still is conducive for more upside. Another thing that helps keep it propped up at the moment is dollar weakness, which you can see here. We had a major breakdown and retest of a previous trend line from over here, which has just continued with that downside emphasis ever since. So this has helped a lot with equity strength. And as long as we see the dollar continue to fall down from here, there will be a continued bid on any pullback, for that matter, on the general market. So regardless of that, though, as always, appreciate you guys watching this video, and I'll see you next time.